Hello, welcome to the latest episode of Urban Manifesto. Winston Churchill famously warned while working to form what we now know as United Nations after World War II. He said, "You never want to let a good crisis go to waste." The COVID-19 pandemic has tested our countries, our communities, our cities, and beyond the immediate priority of everyone's health and well-being and livelihood, the crisis is a great opportunity to reimagine the way we build and run cities so they are more fair, inclusive, and resilient. In this series, we want to outline agendas and principles for better urban futures. We are so thrilled to bring this series to you in collaboration with Architecture Foundation. I am Pratima Manohar. I'm the founder of the Urban Vision, which is a think do tank. And I'm so delighted to co host the series together with my colleague, Lucy Bulivan, the founder of urbanista.org, which is a webzine for livable urbanism. Thank you again for joining us. Please share your comments and thoughts throughout the programming today in the video link below. We'd love to hear your thoughts on this important topic and theme today. And yeah, over to you, Lucy.
Thank you very much, Prathima. So hello, everybody. It's very good to be back again on the Urban Manifesto channel, our special webinar series. Today's theme is sustainable finance. And we are really delighted to welcome our splendid guest speaker today, Cecile Moitry, who is the Director of Sustainable Finance and Development at BNP Paribas Corporate and Investment Banking, which has maintained a leading position in global sustainable finance for quite some time now. Welcome, Céline. Céline, hello, hi.
Thank you very much.
It's a pleasure to...
Hello, good afternoon.
It's a pleasure to see you.
I do apologize. I have a lot of problem hearing you. It's breaking up quite a lot. I hope you're on side when please know if this is just terrible, but on my side it's not so good. So I hope it will be okay.
We can hear you well.
We can hear you very well. If you get into problems, one thing you could do is just try logging off and coming back in again. Do you want to, if you get into problems, just raise your hand and we can stop. But shall we keep going for the moment?
Okay. All I could hear is that you can hear me, so I'll go with that, and we'll see for the question for the session. So apologies for the IT problem. So first of all, I have to say I'm extremely pleased to have this discussion and this conference. Not least because it gives me the opportunity to speak with other people than bankers or treasurer. Don't get me wrong, this can be fantastic discussion, but it's still good to be exchanging with people from different backgrounds. Also because just to share with you, for so many years I've been doing infrastructure financing. I'm fundamentally convinced by the fact that architecture, real estate effectively shape and frame our life in a way that it's always quite. Third reason that makes conference extremely exciting for me is I'm based in Paris, and I must say there is no moment, no speech by a French politician that when it talks to sustainability or when it talks about the world of tomorrow, the after COVID, doesn't mention real estate, doesn't mention the need for retrofitting some buildings, the need for more green buildings. And I guess the fact that we're all on lockdown for so many weeks, also made us realize that where we live is also, not being able to go away from it is kind of key. So I think it's going to also a lot of stuff on when it comes to social housing as well, but not only. So maybe, and I still hope you can hear me okay.
We can hear you fine,
I've
Cecile.
prepared a few slides for the presentation.
So Cecile, please go ahead. I did have a couple more points to make in my introduction, but please do continue with your presentation, and then I'll make my points when you've finished presenting.
I'm sorry, I couldn't hear anything. I don't know if there's a question or if it says that let's go ahead with the.
Oh, I think. Should we ask?
Yes.
Are you able to hear us, Cecile? Should we go ahead with the presentation at least? I've your slides up.
Okay. This I heard. Okay. So maybe for the purpose of our discussion, just prepared a few slides before having the Q&A session. And maybe if we go to slide 2, just to share with you that usually when it talks to sustainability, this is much more around, greenhouse gas emissions, environment, and I wanted to take a different angle with you, raising the question, the topic of the population. Ultimately, all the questions that we have about resources, about solutions that are linked to our way of life and way we consume things, is also driven by how many people we are. So, we would be asking ourselves most of the question if we were less. Not entering the what could be a controversial debate as to demography, but just stating the fact the more we are, it's not puts a lot of stress on the sum of resources. If we go to the next slide. So since we are going to be close to 10 billion inhabitants on the planet by 2050, and it's also interesting to bear in mind that this extra 2 billion from where we stand today will be mostly in big cities. And from the map that you see here, this is going to be on cities which are either close to the city. So putting stress on infrastructure, city as they are, a lot of questions on that, but also cities that are located close to water. So with the question of how do you make infrastructure, how do you building resilience when it comes to the potential rise of the sea level. So this is just to put things a little bit into perspective. So now that we have addressed this constraint on where people will be located, we can also raise the topic of what greater number of people means. It means greater needs. So if you go to the next slide. So here's just, assumption as to how much effectively that will mean if we are 8.3 billion people by 2030. It means more need for energy, more need for water, more need for food. Just flagging here that water could be, of course, an obvious resource under constraints, but it's not only the need for water is connected to food or just for drinking purposes, but a lot of it is also driven by what is needed for energy. So, didn't want it to make something this glimpse of this setting the scene, but, just to tell you about what are the trends that we're seeing. So now, because I work for a bank, I wanted to talk you through what does it mean for that. So obviously, those are considerations that to look at. So before we go into the details of it, can I just talk you through few concepts or definition to make sure that we are in the same understanding. So if we move to slide 6. Next slide. Okay, so I thought the good trends on that, and of course, because the bank financing the economy at large, it is important that we are aware of that. Also, because fundamentally the business of the bank is to take risk and to take measurable risk. So if there is risk when it comes to climate change, where are going to be located on building, are they potentially under threat of extreme weather? This is things to be considered. So it's not that the bank have for some time already integrate those aspects. And there have been, so just talking you through some definition and lexic. So when we talk about ESG, it refers to environmental, social, and governance elements. And increasingly, we're taking those features into consideration when we assess a client and we do some lending. So what is it? What do you put behind environmental elements? It's going to be carbon footprint, how much, what is effectively the footprint of a company? Is it very intense when it comes to carbon or not? I will be looking at energy mix. We're going to be looking at either transition topics. So to give you a sense of that, if tomorrow we are constrained with the restriction when it comes to GHG emission, does that mean that we can still finance in the same way some sectors or companies who are heavy producers, or who for which this is a strong element of the business? Should we anticipate that those sector of companies be evolving to a new business model? So this is the kind of question that we ask ourselves. Also very topical at the moment, anything that has to do with deforestation, water usage, pollution. Now turning to social, of course, everything that has to do with human rights, child labor, controversies. And I must say, on social, regulation is picking up quite strongly. So as a bank, we have to ensure that when we do financing, this is we know our client and we know how do they position themselves on that, to make sure that we're not associated to any issues on that topic. And last governance, this is very much how do we assess the way a company is managed, and we will be looking at who are the member of the board, what is the ethics or what is the rule that are put in place. So now that I have gone through quickly as to ESG, there's some other related terms that I want to flag with you. So usually looking at those three components for any companies, any client that we may have, and trying to assess them against the criteria. This is a novelty, because traditionally the bank was looking at financing ratio, but increasingly also looking at this topic. Within the traditional financing landscape, we also have what we call ESG rating agencies. those are third party effectively looking at companies. Those are not banks. Those are, third party, independent, and they will be assessing, the company investor on those criteria. Some of you might be familiar already with those entities or concepts, but if you're not, you can very well go to, on any web of some of those extra financial rating agencies, such as MSCI, Sustainalytics, and you will see that the name of corporate and the equivalent assessment is already out in the public. So increasingly, this is an information that is publicly available and more transparent. Last thing to flag is the difference between CSR and sustainability. So traditionally, CSR, so corporate social responsibility, is the team that can be looking at within companies, and that will be looking at to see how effectively sustainability is integrated. Sustainability can be slightly broader than that, and not only be one department within a company, but sustainability might very well be the way a company look at its business at large. So that was, me just sharing with you some of the lexic that bankers can use, but it's of course not specific to banks. If we move to the next slide, so sharing with you why banks are looking at this topic. So bank takes risk, and it's important that we have a good understanding of risk and that we have the right tools to assess with what we call those extra financial risk or clients. That it would be limited to say that banks are only at for risk aspects. There's also increasingly stakeholder or third party that are pushing for this for the fact that bank looks very much closely at sustainability. So here, in the very generic terms, I have highlighted 3 categories of stakeholder. So first would be regulators, because banks regulate animals, for lack of a better word, and we will have to comply and follow with directives of the regulator. Increasingly, regulators and, for instance, central banks are either, getting hold of, pushing via questionnaire, and kind of signaling that this is something that they're looking at with great interest. You also have a new category of investor, which are the ESG investor. And so when it comes to, in the financing world, those ESG investors some of them have been in the space for quite some time, and also, pushing not only the banks, also the corporates, as to integrate it in a more stringent ESG criteria. Final, big stakeholder. I call it supply trends. We can call it the market, if it's easier. But just to tell you that, of course, corporates are moving heavily to that space. A customer of the bank are moving to that space and are being extremely vocal on that. So that's the combination of both our investor, our client, and the regulators that is the reason for the bank entering this space. So if we go to the next slide. So here, and I promise I'll go to the details of these slides, but this is just to flag that sustainability is not something necessarily very new. It's been there for quite some time, although maybe not with the same, impact and prominence as it has today. But so the two things I wanted to flag to you is here, we've started by 1951, and with different type of initiatives. What I wanted to look at is the fact that since 2015, there's been acceleration in the case of other, global framework, global institution. We can think of the COP21. We can think the United Nations with the Sustainability Development Goals. Just signaling here again the fact the topics gets more and more impact and importance for that. And it's also moving to what could look like more like United Nations initiatives to something which is far more related to either business or a regulatory topic. The second element I wanted to flag with you on this slide is what you have on the bottom part of it, which are the 17 Sustainability Development Goals. And those goals are, kind of trying to encompass, so many different dimensions that sustainability can have. And you will see that, of course, renewable energy is one of it, but also sustainable infrastructure and the topics of CTE are effectively flagged. So I just mentioned the sustainability.
We are sometimes losing your. Hi, Cecile. Can you hear us?
Yeah, I can.
Okay,
I was waiting. You're saying sometimes you're losing.
Yes, but you're back now. I think it was just briefly. Okay, we still have your slides up, Cecile.
Okay, great. I just mentioned the Sustainable Development Goals, so the 17 Sustainable Development Goals. Increasingly, this is something that is used by a company to demonstrate how they are aligned and how do they engage when it comes to sustainability. But if we go to next slide, just to share with you that so the Sustainable Development Goals have a time frame, and the idea is to reach them by 2035. But it's also flagging the fact that there's tremendous need for investment. And so this is what this graph is effectively saying is if we want to reach the Sustainable Development Goals, we need per year $4 trillion investment on the various categories for that. So this is where also the banks kick in, so to speak, as to how we will help and contribute financing that. I'm conscious of time, so I suggest maybe there's two more things I want to flag to this group. The first one being on, so I'm not going to be talking to you about what BNP Paribas does when it comes to sustainability, which is on the next slide. All I wanted to flag is on slide 12. Yeah. So next slide. Yeah, perfect. So maybe something I wanted to flag was in relation to risk. I mentioned that banks cares about risk, look at risk, assess, and make decision on risk. Effectively, when you talk about climate change, there's three categories of risk being represented: transition risk, which is you diesel car manufacturer, how likely are you to be in the business in the next 5 years. So, and how do you transition, and how do we accompany that? Physical risk is the risk in connection to, you have built your plants, your factories in a place which is effectively prone to adverse climate events, so it will have a physical impact. Or, because of climate change, there's a disturbance in the way you are either building things, either supplying, or getting your suppliers coming to your plant. So this is this kind of risk. This is what is the liability risk. Is increasingly we anticipate that if financial institutions, but not only, take action, they will face trial for that. To give you some example, in the Netherlands, there's been some sort of class action claiming that the government was not doing enough when it comes to climate change, and so citizens were effectively suing the government for that. So, those are increasingly embedded within the thought and the way a bank look at financing. So the last point I wanted to share with you, and it's going to be on slide 15. So hoping I won't be too specific or technical on that. I'm just waiting for the slide to appear. So I wanted to share with you some development. So I've been talking about, okay, the trends, the risk, why banks look at it. And then there's traditionally, there's two types of financial products that the bank are considering or two categories when they are talking about sustainable finance. Then one which consists of financing green assets. So that will be financing renewable energy project, that will be financing a green building. And those are seen as green finance because what we finance effectively answer the specific green taxonomy or has specific features. This is how finance started for banks. But more recently, we are cognizant that green is only part of the equation, and some company, although being extremely committed to sustainability, were not in a position to either demonstrate that or doing any green financing. So the idea here was very much, okay, when we do finance, we do not only necessarily finance an asset, we do not necessarily finance a building, house, if you're buying a house, or anything. But the bank might be in a position to encourage a certain type of behavior from their client they're financing. And the type of behavior, would be assessed according to those environmental, social, and governance criteria that I've mentioned before. And we'll take that into the equation. And effectively, banks with what we now call sustainability-linked loan are pushing some corporates to commit on sustainability goals, and provided that they reach those goals, they have a better, a more interesting margin, a more interesting financing condition. But provided that they do not reach those goals and they underperform according to that, they will be penalized with a higher margin or premium being added to the financing. So just wanted to flag that to you as another possible road or option to consider when discuss about sustainable finance. So I think, this is Urban Manifesto, and I understand that the audience, there's either a lot of you who are, working as architects, as architect or in a real estate company, when it's sustainable finance, there's very much those two options that could be contemplated, being on one side financing building, financing retrofitting, financing resilient infrastructure, but there can be also another way, which would be, for instance, companies of a large portfolio of real estate assets could be, okay, how much of their assets of the portfolio has some best-in-class label when it comes to energy efficiency, for instance. I'll pause there. I hope we won't have too much trouble. I'll have too much trouble to hear your question and hear if there's any reaction.
Thank you very much, Cecile. Can you hear me? Can you hear me? Cecile, can you hear me? Can you hear me?
Yeah.
Now, we are going to present our position just in a brief summary before we move to the questions. But what Prathima and I would like you to do to enhance the audibility is if you could log out and log back in again, and we'll see if that improves the audibility even more. Can you hear that?
I do apologize. I couldn't hear any of this. I'm so sorry.
Prathima, can you try this? You're muted, actually.
Can you hear me? Can I request you to log out and log back in so we can continue with the Q&A session? I don't think she's able to hear us. Cecile?
Apologies.
Are you on WhatsApp?
I'm really struggling here. What I suggest is
Prathima, are you on WhatsApp?
I can disconnect and try to reconnect and hoping that the connection will be better.
Yes.
Is it okay if I try that?
Reconnect, yeah.
Yes.
Okay. Merci. Okay.
We've never faced so much of technical trouble in the past. I guess it's just the internet.
You know, Wi-Fi and broadband, it's nothing in this life is guaranteed, you know, and Wi-Fi is like wind sometimes.
You're right.
So we apologize for putting your auditory abilities under a little bit of stress with that, but I hope that you managed to pick up some of the key points that Cecile made, because she is, I mean, not only is BNP Paribas one of the key banks in the world, which since 2011 has made fighting climate change one of its priorities and leading on renewable energy finance and green bond issuance. She herself has considerable experience, 15 years in this field of finance for sustainability infrastructure and energy assets. So Cecile, how are you hearing us now? I'm just going to make a few points.
It's better.
Is it better?
I think it will.
That's marvelous. I just reinforce for our audience your credentials and the credentials of BNP Paribas, just in case anyone is not aware. So I'm going to just briefly point out for the audience, by way of a little bit of our summary of Prathima and my position on this. We want to refer also to Mark Carney, and then we'll move towards the questions and answers, the Q&A session. And this just sets the scene a little bit. I was going to make these points in the introduction. So obviously, absolutely real pressing concerns about climate emergency, biodiversity, social inclusion and inequality, they continue to mount globally. More and more people are exposed to climate change risks as part of population increase. And then we're seeing this rapid growth, this phenomenal disruptive effect of the growth of responsible investment. And this is going along with, as Cecile, you pointed out, the parallel expansion in the prominence of sustainability frameworks. So 2 examples, as you cited, being COP21 5 years ago and the UN's SDGs the following year. So from our perspective, sustainability criteria, and we're urbanists, they absolutely have to be integrated into investments that companies and indeed as many individuals as possible make when they, in order to sufficiently support this transition to a climate neutral economy and to resilient economic growth, while at the same time reducing pressures on the environment, taking into full account the social and the governance aspects, the S and the G in the ESG. So as Mark Carney, who you flagged up, the UN Special Envoy for Climate Action and Finance, said recently, he said, finance really lost its way in the run-up to and during the financial crisis, and we need it to go back to being part of the solution, back to helping society achieve what it wants. Finance is not an end in itself, it is a means to an end. So we have many, many questions. We know that as sustainable investment soars, particularly in the field of renewable energy, we're curious to know how that shifts a capital allocation because of these serious risks of climate change and the other factors. How does that work? What are the challenges and patterns of this evolution? What are the risks? As you pointed out, there's three: transition, physical, liability. How do they play out? What impact is sustainable finance and the very mainstreaming of ESG investing? What is it having? If impact is it having? Are you catching me? I'm just going to finish off.
I'm really struggling. Is there any way we can maybe through the chats exchanging the questions, so at least I can, get the question properly? I heard that you were mentioning and referring to investors. So I don't know if you want me on that, or if there was
this was a little summary before we actually Prathima and I share the questions. So I was just finishing off by saying what's the impact on real estate development, and obviously BNP Paribas is playing a very proactive strategic role. So that's the end of my little summary to set the scene. And Prathima's got her first question lined up. So, hey Prathima, one thing you could try is you could put could you put your question in the private chat for Cecile? That might help.
We can try. Cecile, are you able to hear us?
Where's the private chat? Let's just.
Sorry.
No, I think that's tough, Lucy, because I think she's. Cecile, can you hear us now? Should we?
Who has access to the private chat? Is it all three of us, by the way?
Yes.
Oh, yes, here it is. I've just put it in.
Okay, I see the chat. Okay.
Maybe, Prathima, you...
Thank you for
that. We want to ask you, Cecile.
Just reading the question out loud.
Prathima, if you ask the question, then Cecile can read it, and then we can have some interaction.
Cecile, you mentioned that the three drivers of sustainability.
Okay, I'm going to read the question.
Yeah, great. That's a good idea.
As you say, three drivers of sustainable finance are ESG, investor drivers, and super trends. How precisely are each of these now currently driving a rise in sustainable finance? I would say they have different weights, in a sense that typical regulator could be massive change. The moment the regulator impose, for instance, on the bank, you have to finance a certain type of company and in which you want leverage in that sense. I must say, this is something, of course, we are monitoring and following on that. But key drivers actually have been more investor and the market as a whole. And on some initiatives, it's quite interesting to see that didn't haven't weighed either for regulator or politicians to say, well, you should be investing or divesting on some of the sector. This is something that the bank are moving themselves. Just to give you an idea, for instance, BNP Paribas has put in place a very stringent policy when it comes to finance specific sectors, and you can find it on the website. So everything that's going to be linked to nuclear, defense, pulp and paper, and conventional oil and gas are very stringent. So this will be the way it will be done. Or another example with the fact that the bank has exited tobacco. So on some occasion, I'd say that the market or investor are extremely strong to make banks moving or reacting. Question 2: how can ESG funding respond to the climate change challenges facing global cities and territories? The risk of climate change, including fire, flooding, and heat, threaten business operation and.
I think we can't. The audio is too spotty for me.
Worldwide. Investors are not.
Prathima.
Are you able to hear?
I can hear you.
Shall we end the session and start again? No, I mean, shall we have?
Yeah, I think it's Cecile, we are not able to hear you too well. I think the audio is too spotty. But I think we should reschedule time with you at some other point. But I was very excited to get your presentation because I think we got an overview and summary of the world of sustainable finance, where you link environmental and social performance and incentivize businesses to do good. And it's a very fascinating way to think about economic development, and it can be such a huge disruptive force if banks start measuring your success not just from profits or but looking at sustainability indicators and social indicators and giving you better rates. Imagine getting better interest rates as a business if you achieve social and environmental indexes. So I know we have had a lot of technical trouble during this session, and Cecile's not able to hear us, and we can't seem to fully hear her as well. So I'm going to just type her a message, and I think we'll have to wrap up this session early and reschedule for another time. Lucy, any thoughts?
Yes. So I'm just typing a message to Cecile now so she can receive this. So sorry. Oh, I'm saying so sorry. Technology is not in play. It's not on our side this afternoon.
And I want to apologize for our audience who are joining us. This happens with this brave new world of digital public square. Sometimes it's hard for us to talk to each other. But Lucy, do you want to tell us about what we are going to be doing next week?
Well, okay. So number one, we will email Cecile after this session, and we will reorganize this session, and we will republicize our session on sustainable finance for hopefully a bit later in September. And we'll use another device in Paris where Cecile is. And then everything, as mostly all our webinars have been fantastically performed in terms of technology. So next week, next Tuesday, we are delighted that we have Camilla van Deurs, who is the city architect of Copenhagen. Again, she will be the sole speaker, and we will be taking the whole hour to investigate the livable urbanism directions being taken by the municipality and by some of the first-rate architects and urban designers working in Copenhagen at the moment, setting the scene and creating a real resilient, future-proofed vision for the city going forward in the next 10, 20 years, up to, well, at least 2050. So we look forward to seeing all of you next week.
Thank you so much, and stay in touch, and looking forward to seeing all of you next week. And we want to say a quick thank you to Cecile for sharing that presentation on sustainable finance. And I apologize for the tech challenges this evening, and we could not really have the full discussion, but we will definitely try to bring back Cecile and other team members of hers to discuss this very fascinating topic. Thank you so much. Have a great day.
Thank you very much. Thank you. Thank
See
you.
you.